Hello, everybody. Happy Sunday to you. Today is January 15th, 2023. A couple things to share with you. This first one is XLE. Just wanted to kind of update you on my thoughts on XLE, which is energy. As you guys most know, we got in a long time ago back in 2020, made a good profit, sold out in August, and then I got back in November right here. So it's flat from then to now of energy, but I wanted to show you this square right here, this red square, green, red, is a technical bottom of energy, which just usually means when those happen, those double bottoms like that, that's usually a good sign that it's headed upward. So at this point in November, I only got 5% in. Now I want to get 10% in of just your overall portfolio. So I'm just going to tiptoe a little bit more into energy. Like I said, I think for this rest of this year, I think it's going to do very well. Also want to just kind of show you this is the S&P 500, the 1-year chart. And you can see the trend line going down here. This is the recent market rally going through that trend line. So that's good news. And of course, my MACD signals when the purple is above the orange there, that's usually when it's going to continue going up. So in short run, anyways, I don't see it going back down again. So I want to continue kind of building the bottom here because I think that we're still, going to go up this year. I think we'll have positive gains, maybe around 6, 7, 8%. Who the heck knows? Those are my thoughts, though. So I want to just continue kind of, like I said, building a bottom here. So I want to jump another like about 20% in, another 5% of energy. And let me show you the portfolio that I want to do. This is our recession sleeve, if you will. So this is just kind of something I built. You can see we still have a significant amount of cash. The first one I want to get into is just more of the S&P small cap. So you probably already have that because we started tiptoeing in August, I believe, is when I started to begin to build the bottom. Begin to build the base at a bottom that we had. Small cap, again, like I've said, are the ones who will tend to get us out of a recession, even if we are even in a recession. So small companies tend to do that better. Even if we're not in a recession, obviously, I think they're going to do the best going forward. And then the next one is mid cap. So just, a little bit larger companies, not large cap though. The next one is just 5% of, you can see a defense ETF. So with this big $1.2 trillion bill that Biden signed, there's billions and billions set aside for defense. So I'm going to see if we can take advantage of that. All I'm trying to do, guys, here is I'm trying to find some available potential bull markets so we can try to make some money. Not everything is going down at this point. JEPI is a really awesome one. My income people and my dividend people know this one, are very familiar with this one. This one's very popular. This is kind of I guess, a large cap fund. But what's nice is they use options inside. So what that basically means is you're not going to get any major growth from this. If large caps do grow, you will. But what they're doing is they're selling options, and they're using that income for selling those options, which is why you're not getting all the upside. They're selling that option and giving you a dividend. And look at that. It's 11.42% dividend. So that's pretty sweet. Then the next one is cows. Again, you can see these percentages are not very good. So this all makes up for 20% total that I want to get in. Cows is just an ETF that takes the top 100 companies in the S&P that have the most cash balances on their balance sheet. It's an interesting concept, but they did very, very well going into this recession. And just basically what that means is they've got money to do stuff with. I don't want to get technical, but to do stuff with. So they can do acquisitions if they think that's best. They can do dividend payouts. They could do stock buybacks, which usually increases stock price. So they can do a lot of things, and I think that's going to be good as well. Like I said, energy, we're going to get a full 10% in. So you're probably already 5% in if you're a client. We're going to get 5% more in. Healthcare is usually do just fine in a downturn. Gold, dollar is coming down, so gold's doing good, and I think we'll take advantage of that. Just get another 5% in. And then consumer staples. Super boring, but we'll do well if we do go into recession. If you look at any staple, just go on Yahoo Finance and look up VDC, Victor, David, Charlie there. Consumer staples don't do very well in a normal economy. So that's why I'm not usually a big fan of them. But as of right now, they're doing good because of a possible recession, right? So that's kind of what I want to do. Please reach out to me and let me know if you don't want to. Most of my clients, you guys know what I want to get into, and the people that I will not invest right now because they just don't want to for various reasons. And some of you are, you let me do whatever is best for you. So a lot of different things, but I'm always going to have a link on the emails where you can make an appointment and say, Dan, don't do it. Or Dan, totally agree. Or if you're one of those who I just will do what's best for you, then you don't have to respond at all. Okay, the other thing I wanted to quickly share is I'm going to begin to do options. So what that means is we're going to be able to get into the S&P 500 overseas, international, emerging markets overseas. Emerging markets are just like, if we're a first world, we're getting into second world or third world countries that are emerging. QQQ, which are, the NASDAQ technology stocks, and domestic. Did I say domestic? Oh, yeah. Oh, S&P was what I said, but really a vast array of domestic. We can do S&P, we can do small cap, and we can do mid cap. When I say that, so we can get into these particular holdings in particular areas of the world, but we can use options to make sure you don't lose anything. So we can cap 15% loss. Sorry, that's a bad choice of words. Not cap it, but buffer it. Meaning, if we get into these particular holdings and they go down 15%, you will not lose anything. Okay, if they go down 10%, you will not lose anything. If they go down 20%, you will lose 5. Okay, so the buffer is 15%. This is a really cool a way of investing. Options were not always an option to invest in, but due to a recent law change, now we can do this. So it's pretty exciting, I think. All these holdings that we can get into that have this 15% buffer, there's also going to be a cap, but the cap is super high. And we're going to be able to figure out what that cap is at the beginning of each month. So if this is something interesting to you, let's start discussing it before the beginning of the month. And then once we get in, the particular holding is purchased and the options are purchased, right? So we're going to protect your downside, but the cost of those options are going to cap our upside. But usually it's like, the ones that we did in January was almost 20% that we could cap all the way up to the upside and cover 15% loss, knowing that if we get a 20% loss, you're going to lose 5. If we get a 30% loss, you're going to lose 15%. But a 15% buffer is pretty healthy. The cost for this, 0.79%. That's another thing that I found. Usually when we get into options, it gets super expensive. This, not so much. So for an additional 0.79% above my fee, we can get into particular holdings. And I wouldn't recommend this for all your money, this is not going to be the 20% I'm getting into either. If this is of interest to you, you need to reach out to me so we can kind of go over everything that's that goes with this. So basically, we can build a diversified portfolio, domestic, small cap, mid cap, overseas, emerging markets, NASDAQ, and not be worried about the first 15% loss if it does get that bad. But we can get all the upside all the way up to a certain cap. We don't know until the end of each month what that new cap's going to be for that month, but it's a year holding. So we want to hold on to the strategy for at least a year. We can get out earlier, but options need to be sold and you will not get what's promised. Okay, so if you hold it onto the year, though, you will get what's promised up to the cap, 15% negative downside buffer. Okay, so this was the longest one I've done in a long time, 8 minutes, 53 seconds so far. I hope I didn't throw too much at you, but I want to talk to everybody. Okay, so email me, call the office, get on my calendar. And again, there's going to be a link in this email so you can get on my calendar. Let's talk. Does this option thing sound interesting to you? Well, then let's do it. Or if you don't want me to get all in, let's do it. But I'm going to start doing it pretty soon here with the people that I know makes sense for on Monday. So if the market continues to rally, I really want to take advantage of that. So please do not delay too long. That's it. Thanks, everybody. Appreciate it.